Yeah, boy! You guys ready? All right, good morning, Komatelevu. How are you? I don't have the chat, so I have no idea what you're saying. How come I don't have the chat? Oh, there it is. There we go. Komatelevu, how are you? Ni hao ma. What's up, Nancy? Ni hao, Nancy. Hang on, I gotta move some pages around so I can see everything. You're looking beautiful this morning. All right, I almost got everything moved around. All right, so let's do this. Let's just say good morning again. Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning trades. Cheers to you. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble. Focus on the long term. Never risk money you cannot afford to lose. Hey, my name is Wayne. I trade currencies. I also like what? Gold, oil, Bitcoin, stock indices. So if you like those kinds of things, you are in the right place. We are in the middle of the summer doldrums, so very often we lose trend and we get either volatility or just sort of the up and down and up and down. Happens, bro. So the worst thing you could do is force trades this time of year, just sort of a heads up. So what we want to do is go through the charts, go through the calendar. Like there's no news today, okay? But what you'll probably see today is, at least for part of the day, a counter of what you would expect to happen during post non-farm payrolls. People kind of just trading against each other for the sake of trading against each other, and then by the end of the week we'll get our CPI news on Wednesday, and then we'll kind of move on to maybe what will develop as trends for the rest of the year. I want you to think of this time of August, right, second week of August, as being trendless. So be careful. Don't force your trades. Don't push your trades. Be skeptical of what you see. Focus on the longer term, and by that I mean fundamentals, and then line up your technicals accordingly. Now, you can scalp, spot, and day trade just fine. What I call shooting at rabbits is pretty normal this time of year. But don't take your eyes off the big game, which would be your fundamental bias. So let me know how I can help. In the description below, you'll find a link to my book, Strategic and Tactical Forex Trading. You'll see a link to the FX Bootcamp community, which is $88 a year, which gets you 65 hours of foreign exchange trading videos. And there's a link to tradersway.com, a trustworthy and ethical foreign exchange broker. You need a broker? Hey, why not have one that's trustworthy and ethical? Seriously, check them out. Tradersway.com. They earned my loyalty and respect a long time ago, many years ago. I think we're approaching 8 or 9 years ago I ran into Traders Way. So, see if they can earn your loyalty and respect. Start by opening up a demo account. If you don't want to click the link because you got a problem with clicking links, you're like, he's going to track me. Just go. Just go. Tradersway.com. Just type it in. Okay? Coolio. So grand rising to you. Must be Monday. The coffee tastes so good. I'm going to have to get another coffee very soon. So here I am at the Forex.Today website. And you can see there's no news today. One of the things that's probably not on this calendar is that we have, I think, 3 Fed speakers this week. Kashkari, it's not Bullard. Who is it? Kashkari, somebody, and Mary, what's her last name? Anyways, we got 3 Fed speakers. I believe 2 of them are before Wednesday. So kind of Google that. We have Chinese inflation coming up late tomorrow, which is really Tuesday night, Wednesday morning. I'd like to thank Darko for pointing out that Chinese GDP, trade balance was high. The surplus was high. But if you do the deep dive, you find out the surplus is high because they're not importing anything. They're not exporting much, but they're importing even less. And oy vey, that throws things off. Oh, great insight and analysis on FB, by the way. Oh, 10 thumbs up, man. Hey, I appreciate that. Thank you, Mubarak. Yeah, it was cool going through the fundamentals first to uncover that the market consensus set by experts was dumb. Oh my gosh. Hey man, look, we all can make mistakes, and you can have good analysis, and it doesn't mean it lines up to a profitable trade. But I just kind of went through the logic, and I'm like, I don't see how they got 260. I don't see it. Now, I might not even believe 560 was the number either. So look for a big revision next week. Okay, or next month. Okay, so anyways, then Wednesday, dominated by CPI. I mean, we're all consumed by inflation, right? Kiwi and Aussie news later that night in the Asian session. Thursday, PPI. Ideally, it'd be great if PPI was falling. Initial jobless claims, we're keeping an eye on that. Although, I sort of have a theory developing that unemployment doesn't really fall that much. The Fed keeps raising interest rates, but unemployment doesn't rise. Employment doesn't fall. So we don't fall to 5% unemployment. We stay above 5%. And the Fed is trying to slow the economy down, which would then, to get there, people would have to lose jobs. That's what they mean by slowing it down. They don't want to say we're trying to get you fired from your job. They're trying to kill inflation, which means they have to kill your job. So you have no money to spend so that you can't push up prices. Okay? Now, let's say they keep raising interest rates and you don't lose your job. One of the things I think we'll see first is a change in JOLTS, not necessarily weekly jobless claims and NFP, but weekly jobless claims has a trend that looks like this, and it's just slightly up now. But we'll have to watch JOLTS as well. Okay? Because how could you have 5 or 6%, let's say 6% unemployment, when there are millions of jobs available? So to get unemployment down, I think you'll have to lose some of those jobs that are out there that can't find people. So companies have to say, hey man, before we start laying people off, stop spending money trying to hire people. Okay? So anyways, maybe we should be watching JOLTS more than we watch NFP. Just a thought. Let me know your thought on that. Maybe leave a comment. JOLTS versus NFP. Because the thing is, NFP is a survey. JOLTS are actually the number of jobs available. Not a survey. And then Friday. Pig, piggy. It's all pig on Friday. So maybe after the moves on Wednesday, based on inflation, maybe you roll over to pound. Okay. Milos is taking notes. Initial jobless claims, JOLTS, and NFP. Yep. But don't connect them. I think sometimes what happens is people connect them, kind of like how you wrote it, but I don't know how else you'd write it, so I'm not picking on that. But let's say if JOLTS is down, that doesn't mean NFP is down. Oh, I see. Order of importance? Yeah, I suppose. Yeah, I see what you're saying. Yeah, okay. I'm fine with that. I'm not here to argue over something like that. That makes sense to me. Someone could have a counterpoint, but I'm not going to make one. Well, like I said, they're not necessarily connected. So if there are 2 million jobs available, and more than there are people looking for work, then if it drops from 2 million to 1 million, that doesn't necessarily mean non-farm payrolls is down. You can still have a big non-farm payrolls. Despite half as many jobs, there's still too many jobs. All right, so let's see what you're trading. It's on your mind. Dollar. Morning, Darko. Hey, I just publicly thanked you. I think you missed it, though. I said you pointed out the change in trade balance with China, the surplus. But the surplus was more from not buying than actually exporting more. So they exported poorly, but imported even more poorly. So anyways. Morning, Maida. Diago wants WTI. Yeah, we can get there. I didn't add that, but let's see how you answered the poll. Let's just take a look first and see how this adds up. But thank you for completing the survey. Appreciate that. Oh, Codenames also wants to do WTI. We have 3 kind of bottoms on WTI. What would the bullish plan be on oil? Well, we'll take a look at that in a second. I'm concerned about how the U.S. government is participating in the oil market. Now I think they're trying to mask some of the problems, and which is worse. I don't like an opaque market. I want a transparent market. So I have a little bit of a problem now with WTI. I do, on the long run, want to trade it up, but it'll go where people will want to take oil. Let's say it can drop down to 50. It doesn't have to go to 100. It doesn't have to go to 150. Now, why would it go to 50? Well, partially because people think it will. Now, why would it fundamentally? Well, you have to analyze things fundamentally, and even if you want like technical analysis of the physical market. No, we're not talking technical analysis of a chart. I'm talking physical market. And that's now being manipulated by the government. And I don't think that's ever been done before, but it bothers me. It bothers me that they went in to manipulate that. But that's a barometer of reality, and you take away a barometer of reality, I think that's dangerous. Define ghost numbers, JR. I'm not sure if I'm following you. Well, you do that. Okay. What you're looking here at the short term is, okay, we have a down and an up. Do you think down or continued up? Okay. Aussie is just in a range, so maybe you trap it. Once again, with Kitty CAD, do you think range or do you think up? Okay, so this higher high is different. Okay. Euro's strong, I see that. Of course, I prefer it being weak. So what I would look for is something like this. We don't have that yet. Yen is weak. Money is leaving Japan. Morning, Peter. Okay, money's leaving Japan. Watch the YCC. And dollar, so this makes a ton of sense. What I was worried about today is that we get a counter move just because everyone is so certain, and then we resume. Okay, Swissy, I would follow the same way. Okay, this is going to be impacted by YCC, so I would split it. But I'll tell you what I normally do. I'm sure if you just randomly, I don't know, I'm not even thinking of a date, but let's just say 5 years ago. In August, I would have been trading this up, and trading this up. And the only way, it's the way I'm looking at it now. And again, I don't even know 5 years ago in my mind. Like I'm just grabbing at straws because maybe I was trading something specifically with Swiss National Bank then. I don't know. But I'm just trying to say normally if I were to throw some seasonality on that, this is what I would be doing, at least in my mind, looking for that. And if I didn't get technical setups, obviously I'm not trading it, but seasonality-wise, seasonally. But with YCC being so important right now, I just separate this out. Okay, JR says, well, I'm a beginner, but the best explanation I got from someone trying to explain it. Oh, are you, okay, you're saying ghost numbers for employment. Trying to explain, it could be possible, projected value of future workforce. Hey, good morning, Hope. Was it possible to deal with projected value of the... Yeah, I'm not sure. Either I'm missing the point or you're not describing it quite right. Ghost numbers on the job. See, like projected value of the future workforce. I don't understand that. What value are we measuring? And like future workforce, are you talking about the participation rate, or are you talking about the actual definition of the labor force? Because like if you're unemployed, you're part of the labor force. If you're on welfare, you're not part of the labor force. And so, yeah. So I'm a little bit lost on the question, but hey, but if you find it important, do a little more research, clarify the question, and I'll see if I have a comment. Okay. Yeah. Okay. Cool. Right on, man. Keep with it. It's interesting. I'm just not following. That's all. Cool. So let's go over. Apparently, a lot of people are interested in gold, oil, and Bitcoin. So let's do that. Okay. So last night I was talking about the importance of you having barometers of risk on and risk off. And that this was one, and we're maintaining a trend line. We're in a bearish sell zone. So if you're going to use pivot points, for example, this would be the best selling pivot point of the month if you're a bear. I'm not saying you are a bear or you should be a bear. I'm not saying I'm a bear. I'm not saying I'm a bull either. But this is the best medium-term opportunity you're going to have. Uh-oh. My mouse just died. I forgot about that. Son of a... Why did I forget? This happened to me last night. I might have to run upstairs and get some batteries. It sucks because it's like 500 stairs. Oh, yeah, it's died. Oh, no. I might have to put you on pause and go get a battery. Let me see if I just put the old battery, because I just replaced it. I don't think these mice are supposed to be eating batteries like that. Let's try this one. Oh, well, it did something. All right, we'll try this one for a while. So it's more like if you are a bear, you're getting ready to look for a setup. Hua? Okay. Yeah, that's Darko. I think you're right. Well, thing is, I have like a $300 keyboard and a $2 mouse. Or a jelly or whatever these things are. Yeah, jelly. All right. So anyway, so yeah, that's all. So if you got some sort of collapse in here, that would be your game on mode, but that would be risk off, stock market down, dollar strong, so on and so forth. And I would not be shocked if that happened. But what I talked about last night, I'm wondering if, I wasn't sure if it would happen today, because you would expect it to happen today. Therefore, I would expect it not to happen today because it's expected to happen. I know. All right, so my oh my WTI, I want to be a buyer on this. So the way that you analyze things is you do fundamentals. Okay. You do fundamentals, and you could look at GDP, you could look at inflation, you could look at jobs, you could look at interest rates. Uh-oh, my mouse is dying again. You could look at interest rates. You could look at all kinds of things, right? The COT data. Oh, yeah, it's dying. So on and so forth. Right? That which is institutional, you could look at retail positioning, aka dumb money, all that kind of stuff, right? And you can analyze this and more and say, and I'm not saying this is it, I'm just saying you could conclude if you looked at all this and did your own research, right? Oh, seasonality. You guys like seasonality, right? Okay. So you got seasonality, you got all of that, and this might all of that can make you have the conclusion of up, which would be perfectly acceptable because this data is factual. But because GDP has been trending, doesn't mean it'll continue. Just because COT positions are reported one way or the other doesn't mean they're like that now or tomorrow, or by the time you get the next report, you might see there is a significant change. Interest rates are not likely to stay the same. Inflation has been going up and might be coming down. So you get like all of this are variables. And just because something happened over the last 5 years on average, or the last 20 years on average, doesn't mean we're going to have an average year. So you can have all these facts that line up to tell you up. But if it's falling, you don't buy it. You see? So I might have a bullish opinion on this for various reasons, and even reasons not even there. But I could look at this chart and say, well, it ain't bullish yet. So if you were going, or if I was going to trade this, technically, that's what the plan would be, and B would be the plan. C is right out. Rhino says, looks like pivot points are a really good indicator. Join FX Bootcamp. Your world is about to change. It's $88, bro. You're going to know so much about pivot points that you'll never go back. Yeah. Now, these are not pivot points. These are, I'm marking the sessions. Okay. So like you could look at, this is the New York, whoa, yeah. Okay, this is the New York Open, this is the New York Open. No, that's not. Let's do it again. New York Open, New York Open, New York Open, New York Open. Okay. New York Open, New York Open, and New York Open. And so I'm doing an oil trading course, and I'm teaching people how to trade oil. First of all, they have to become experts in the energy complex. And everyone is becoming an expert in the energy complex. Because now they know what a perforation gun looks like. Now they know what a meter run does. Now they know the difference between a vertical separator and a heater treater. They know how to drill oil. It's pretty amazing. They know how oil flows underground through the strata. Cool. So anyways, we'll get to a point where we're doing the technical scalping of oil. And if you look, it seems that if you trade oil at the right time, okay, often, not always, but often you get a pretty decent move. So this was a pretty good move. This was not. This was, and we don't know. Is it going to be like this today? Or is it going to be like this today? Well, that's for you to figure out, but you know. Anywho, I want to be a bull, but it's not bullish. Okay? Capiche? So I have permission, if I'm fundamentally bullish, of course I could ignore this, but I could day trade it down or I can scalp it. Hey, if I pick $2 or $3 up off on a short, it's totally okay. But if this slowly turns bullish and I'm fundamentally bullish, I should be in for $5 to $10 to $20 to $50. Do you understand that? I would say $10 per trade. So if I get 5 trades on and they each hit $10, that should be a really nice month. AKA a fiver, a 5%er. Okay, cool. You're like, but Wayne, that's $50 in oil. You should be up 500%, maybe 5,000%. You might be more leveraged than me. Rhino, are you going to join? $88 a year is going to hold you back. You'll get training and the indicator. It's one of the things I have to work on today. I fired my programmer, by the way. Fired him. So I'll have to go in there manually. But we're setting it a time so that you can download and install the indicators yourself. So you get the... I used to sell the indicators. Now they're just free with your membership. Yeah, time for another Cappy. Oh, I need it. I need it. All right, cool. So anyways, this is what I'm hoping for. And do you know why? Well, the same reason I drew all of these lines 2.5 weeks ago. Rhino, I dropped the price from about $1,000 at the beginning of COVID to $88. That's the discount. Yep. All right, so anyway, so that's what I'm looking at. Again, I drew this weeks ago that it would go up for a bit and then come around. I can tell you seasonality around this period has gold going up for a bit. It's pretty seasonal. But, you know, and of course this bottom is a Fed meeting. So it's more like in the period between this Fed meeting and then the next one is going to be way out here. All I think is that people got really hopeful and then we wake up and smell the coffee. Speaking about coffee, I'm going to go get another one. You know, wishful thinking, reality. Another way of looking at it is the big positions are taken out of the market because that's the last important day of the summer. Then the big boys take profit, the market fades, and then as we approach the end of August, volume and volatility slowly returns. By September, October, this is lower. Okay, remember, I don't have opinions and I don't have guesses. So that's part of a model. I'm modeling because I'm... Anyways, I'm saying the model says if we continue this direction with the current variance of trend, then we are a standard deviation from the mean. It doesn't mean it can't go higher. All it's suggesting is, look, if you're measuring this, you're measuring trend. Trend means continuation. So if you think there's continuation, then it should continue soon in the direction of the trend, and that this was a normal variance. Okay? And again, the calculation of standard deviation, okay, it's just the square root of the variance. Okay? So it's like, well, all right, so it's normal. Only if you have been measuring here to here, here to here, here to here, here to here, okay? Then isn't it reasonable to think that there is possibility that over the next week, I'm losing my mouse again. Working my mice to death. There we go. Right? That you can get something like that. It's reasonable, isn't it? That's all I'm suggesting is the statistical analysis of price time data suggests that that has reasonable probability if the past repeats itself. But it doesn't necessarily predict the future, so it could go higher if something fundamentally has changed. And if so, those buying gold would say, well, either it's seasonal rally, or they believe something fundamentally has changed at the central bank, like the Fed is closer to, like a lot of people think the Fed's going to stop raising interest rates by the end of December. The December meeting is the last raise. And so they're like, oh my God, that's such good news. I may disagree with that. And therefore, I would not think up. I might think down. And if that's the way I think, then get ready in this period. And again, I drew this 2 weeks ago, the up and then the down with future price action as a model. To translate Brian's comment, I think he's saying I should smash my mouse. Yeah, I think you're right, Brian. Although, kind of violent, though. Maybe I'll go on a field trip and go look at Best Buy. I haven't been to a Best Buy in a long time. They're like, oh, well, we have an Ethernet cable for $400. We have an HDMI 1 cable, technology from 10 years ago. Oh, they're $79 for a 6-foot. We have a USB a USB-B cable. It couldn't charge your phone slower. That's $20. We have speakers with lights on them. Speakers with flashing lights. Yeah, that's the antique markup. Yeah. Yeah. I don't know. It's funny. There's so much marketing that is clearly focused on gender. I've been trying to buy a fancy hair conditioner, and there's clearly like, this was made for a man, marketing, the bottle, black or shiny chrome, and this is made for a woman. It's pink. It smells like coconuts. It's just so funny. And then you go to things like Best Buy and like, over here are all the speakers with flashing lights on them. Like they're selling them to men. Like, ooh, look at this. Look at the funny sparkly lights. And how loud is it? It's 75,000 watts. 75,000 megawatts of power. You're like, oh. And it's got a Bluetooth. And it's got a can opener. And like clearly targeted at men. But then I was at a pool store where they sell supplies and they have toys. They have all these things with sparkles on them. Sparkles, all these like inflatables, toys you can play with in the swimming pool, lay on it, and they all have sparkles. I'm like, I think it's funny. I'm like, gender marketing. But we like to pretend it doesn't exist, but apparently this is how the genders shop. All right, so anyways, there's oil. Trending down. If I was a seller, boy, that would be an interesting price. Roll reversal, 21. Oh, did I just kill it? I just killed it. Son of a... My mouse just flipped over and killed the chart. All right, my oh my, let's add some WTI. Get it back. I lost all my beautiful analysis. I had it on the template. I don't buy rainbow trading sessions. There. We had it like that. And then I had this drawn like that. You can do it like this. You can do it like this is where it's at. And of course, you're looking at the that moving average there and that moving average there. Okay. Cool. Yeah, we could take a look at some of the dollar pairs. Okay. Yeah, we have a little move in here on pound. I want to keep it below 121.80. Okay. Yeah, I stayed away from this one just because it's sort of overly traded. But let's break this one down a little bit. Okay. It's not trending. Oh, thanks, Jim. Okay. You have to understand that first and foremost. I looked at 28 asset classes last night. Almost all of them were neutral. Artem says, hey, normally we would look to sell the yen from the third week of August till the end of the year due to seasonality. But that ended, if I'm not mistaken. It's not that it ended. So when I predicted the year in advance back in January, I talked about this. And to keep the story short, the answer is not this year. Okay, Artem? But I didn't predict that yield curve control would be the biggest impact on Japanese yen. Okay? Oh yeah, this sucks. My mouse is dead again. I might have to end early and then go fix this. Let's see if this one will work now. Yeah, that'll work a little bit. So anyways, I want you to recognize that of the 28 markets, the vast majority of them, I'll just say 75% of currency pairs and stock indices and commodities that I track were neutral. And I cautioned everybody last night in the day trading group, be careful. Don't be aggressive. Expect things not to follow through. Okay? So anyways, right now, this is where we have euro dollar trapped. Okay, I am a bear on this, but it is not trending bearishly. But it'd be interesting if one bearish trend developed like that. I'm not, again, not a prediction, but if it does roll over at the monthly central at 102.20, 102.19, then that'll set up a short off of tomorrow's trade zone. And then we'd have to get through support, which is 101. and then we'd have to get back to parity. And, well, it could happen. It's a little early to deal with that. Again, this time of year we're shooting at rabbits, so I'm not expecting, a move like this. This makes a ton of sense to me. But then there's a reasonable chance that, let's say, September, October will look like that. And I think I have it going down to, 96 or something? Just the basic technical analysis. Okay. So you want to look at it that way. If you look at it over here, get off the daily. It's the same kind of idea. Now you can see I have a little trade on here. What was it based on? A daily sell, weekly sell, cluster. Okay? I would argue this is fundamental as well. Okay? So here's a top, and then I have this line and that line is the rationale, the technical rationale. And you see it worked out really well. And now we're making higher highs, so that's less ideal. But, I got to back this out a little bit more. And really based on weekly analysis, and actually monthly analysis too. Oh, mouse is dead. Maybe if I yell at it or hit it hard. No, breaking it doesn't work, Brian. Anyhow, look at the monthly. Look at the weekly. Okay, weekly weekly sort of trade exit is 121.81. There we go. Okay, this is weekly and this is monthly, and my stop is right here. So I'll just see if I can get through today alive. I could move it lower, but remember this is my monthly. So I have it above monthly, I have it above weekly. And of course what I'm trying to say is not like, think about your stop. What's it trying to do? Well, if we're above those two levels, I do not want to be a seller of this pair. You know what I mean? For sure I don't want, and that's what that's there for. So, okay. Never look at a screen again and get 100, what are those? Yeah, flip it like a backhoe, right, Lucas? Yeah. All right, so you know what? Let me go deal with all of that. I got to get my coffee too. Lots going on, but remember, guys, remember. We're between two singularities. One was non-farm payrolls on Friday. The next one is CPI on Wednesday. We are in probably the worst trading period of the year. You would expect sideways action. I analyzed things fundamentally and technically last night, and of 28 pairs, probably 20 of them were neutral, as one would expect. So don't go thinking like this is just like any time of the year. Don't trade because you think you have to trade. Don't chase price around when most things are lacking trend or conviction. Keep your powder dry if possible. So when the markets are moving and trending, both technically and fundamentally, you can make some good money. Okay? That's all. So don't force it. Don't chase it. Be careful. Stay small, stay humble, and focus on the long term. And I'll see you tomorrow, unless you're in my day trading group, and I'll see you tonight for the Asia Open. Peace on earth, may the pips be with you. May your profits be above average.